Just as a reminder for these chats, feel free to drop questions in the chat. If I see them in real time, I will try to address them. I usually don't. So usually we try to save Q&A for the end. Adam kind of catalogs the questions as they come in, and I'll bounce to him when it comes time for Q&A at the end. Without further ado, I would like to welcome our guest tonight, Grady Buchanan. Grady is the founder and chief investment officer at NVNG Investment Advisors. He is also the founder and CEO of Omnivalley. We're going to get into what all of that is. I am going to stop sharing my screen so we can just have a normal conversation, but I'll make sure I put all the information back up about you, Grady, at the end. Grady, how are you?
I'm doing well, my friend. How are you?
I'm good. I'm glad to catch up. It's been a little while since we've last chatted. How are things on the life side? 2020 has been a year. 2021 has started off with a bang. How are you doing as a human?
Yeah, I was like I said when I just joined. I was in Phoenix last week, which is obviously much nicer than here to come back to. So could be better weather-wise, but yeah, I took a COVID test yesterday and I'm negative, which is great. Doesn't help the way I feel, but things could be better. But yeah, certainly a rough start, but very busy start to 2021. So not too many complaints.
Well, thanks for being a trooper and thanks for joining us still while you're feeling sick. For starters, I know where here is, but I'm not sure all of our audience does. Where is here for you?
Yes, I am in Madison. So just about 90 minutes west of you there for us. But yeah, Madison, Wisconsin.
Perfect. And then just to make sure kind of you understand what we're going for today and our audience understands. So we have been started doing these investor chats as basically an opportunity for the Uncrowd community. So targeting underrepresented founders, so women, Black, Indigenous people of color, LGBTQ founders, trying to create an opportunity for them to get to see and hear and interact with investors firsthand. One of the things that we've noticed has been a tremendous opportunity was just getting comfortable, being like the feeling of being comfortable in the room when it comes time to pitch, the understanding of how investors as humans operate and the value behind that. And so that's kind of the angle with which we will have this conversation today.
I like it. Makes total sense.
If I could start, can you just tell me, we're going to get into just kind of your background, your story. Where did you grow up? What was early life like?
Yeah, so I was actually born out in the DC area. So my parents met out there. So my mom's family is, scattered throughout Maryland still. But my dad was originally from Milwaukee. And so Whitefish Bay, for those familiar with the area, very north suburb of Milwaukee. And he moved us back in grade school, and we're all on the same street, 4 houses away, then from where my dad grew up. So pretty familiar area for him. Went to Whitefish Bay High School. Pretty typical. I mean, it's a very nice community. It's a very affluent community up in Whitefish Bay. So good high school, nice upbringing, very fortunate in that regard. But yeah, from Milwaukee, pretty much.
And when you were growing up, what did you want to do? Or when did you, what were you thinking you were going to go to school for? What was kind of the plan?
I smile because when I get asked this question, I never know a good answer. Because I don't think, honestly, when I was growing up, probably through high school and even into college, I didn't know what I wanted to do, right? I feel like, I should study finance. People seem to make money in that. And I wasn't super interested in anything else because I hadn't figured it out yet. So that was the path that I took. But what I did know pretty early on, and it'll sound very conceited and I don't mean it to, and I'll explain it, but I wanted to be relevant. Like I wanted to do something that, not so much for recognition again, but it's more, I wanted to do something meaningful, whether it be hopefully positive, obviously, but do something that maybe shapes the future, can change some things, or at least, get my viewpoints out there, right or wrong, but hopefully they're heard, and hopefully there's a platform out there that I can do that one day, because, we all think we're smart and we should. But hopefully what I do could be meaningful to others. And so I didn't know what that meant at the time. I probably still don't. But hopefully venture capital can help a lot of people with my particular skill sets. And that's, that's why I went the finance and the econ route.
That's great. This is going to be something I'll come back to a lot tonight, actually, because you're one of the more fascinating people I know in this space because you have touch points at kind of all of the different areas within venture capital. So for me, I tend to be right down at the direct funding side, like founders, VCs, direct connections there. And you are a founder, which we'll get into. You're also an investor at a fund of funds level, which means you're funding other funds. It means you're talking to LPs for your fund. And so you kind of play in all of these different spaces. And I will circle back to all of that because I find it fascinating. But I'm curious, like, did anything drive that? Like, when you were at school at the University of Wisconsin, were you aware of kind of, or curious about all those touch points? Like what were you doing at the University of Wisconsin? Were you like, I'm going to be an investment banker? Were you like, were you a high achiever? Were you already dancing in a bunch of different areas? Or was it just, this is kind of where we ended up and we'll get to it?
I think it's closer to say I was dancing in a bunch of different areas, and I'll preface it for us. It just means I know very little about a lot of things, right? I don't think I'm specialized in any way, but what I did know is I liked to be busy, right? I mean, if my friends around here, they tell you Grady's very needy. He can never be bored. He needs to be entertained in certain ways. And so creating companies seems like a nice way to do that. It's much more challenging. But in school, no, at the university, absolutely not. Never thought about it. I had some friends doing some cool things with a patent that did well, but not really in the startup scene. I wasn't. They never talk about venture capital in the business school, or at least not in the classes I was in. And then I took, I took a economics route, which is outside of the business school. So it was all supply and demand graphs, environmentally, things that I have never used, directly, but I had never thought about that. I mean, and I know, I'm sure we'll get into the Wisconsin Alumni Research Foundation and the tech transfer stuff, but I don't even know what that building did. To be honest, it was on the other side of campus. It was near the intramural flag football fields, but I had no idea what that thing did or why people went there. So no, I had no real experience into it. I did think, you're right, Forrest. I thought maybe I'll try trading or I'll try banking and maybe go private equity. That seems to be the route, but pretty mundane. You find that out pretty quickly. And I'm not saying it's a bad route. It just wasn't for me. You're too busy doing one thing and you don't really have autonomy elsewhere. So I kind of went the route I did because of that, I guess, but still didn't know graduating college what I wanted to do.
Good. So we get out of college and I'm kind of want you to fill in the gaps between graduating college and then getting to, we'll even say WARF, because I think WARF is probably where some things start to make a little more sense, but take me from college to WARF.
So graduated college and I think it was in June. So I was kind of freaking out. I did like 40 interviews because I wanted to test the waters with anything. And mainly because those are the people that accepted my interviews. To answer your question, I was pretty average in school. And then Wells Fargo over in Milwaukee said, yeah, sure, we'll let you do treasury management, sales, consulting. And I was like, that sounds as much fun as I've never heard of anything. So I was like, okay, I'll do that. Nothing against like Baird. It's a great company. But again, I just didn't know if the banking or the trading route was right for me. And I didn't know anything as the inner workings of a company. And so treasury management in itself is just the accounting departments. I mean, you're just moving money around. But my territory and what we were working on was just those who banked with Wells Fargo would use our products on their own accounting team. So very easy sales, if you even want to call it that, but just learning about a company from $1 in to $1 out, how they moved cash. It was a sales role, which I thought might be appealing to me, and I'll try that out. But that went about for 2 years, and I was like, you know what? I don't really want to go from the analyst to consultant and stick in this track. It's not really for me. I've learned enough about companies and how they do things, I thought at the time. And then I decided to go work at Northern Trust down in Chicago. So there was a job opening for performance analytics and risk consult, all these fun investment words. And I was like, okay, I know nothing about any of those, but if investments is the route I want to go. Let's try this one out. And so I went down to Chicago, and that lasted 7 months. So only not because I hated the job, but because you get there, it's like your pit of analysts. And they, excuse me.
Yeah, of course. Take your time.
And they would assign us a bunch of clients, right? Yep. And we can talk about limited partners, and I'm sure your audience knows them, but they were all limited partners. And so one of the limited partners happened to be, you know, like big plans that you'd think of, like Pepsi, Coca-Cola. So when I joined, I was like, what the hell are these, to be honest? Like, I didn't even know what we were looking at. And when these big corporations had these massive $1 billion retirement plans, I was naive. I thought everything, just like our retirements, are all in Vanguard or Fidelity. It's like, I assume that's what institutional investors put most of their money in. It is not. And so Wisconsin Alumni Research Foundation, I'll say WARF from now on, but WARF was one of my clients. And then
I appreciate you clarifying. So it is the Wisconsin Alumni Research Fund. It is a very large fund in our state. I think the largest.
It is
capital.
It is other than SWIB. Yeah. So the state of Wisconsin's got, to put it in perspective, our pension plan in the state is one of the top 25 funds in the world. They have over 110 billion. WARF, which is, like Forrest said, a very large endowment, it's only 3 billion, but 3 billion is still a good sum of money. But it is the tech transfer office. And so this fund is separate and apart from the UW endowment. They're both about 3 billion in size, but the tech transfer thing I think is important. It will come in later, but WARF was a client. They had interviews out there. I assumed that they were just asking, so do you know people? And it's like, yeah, I'll ask around. And then a couple of weeks went by and they're like, are you going to come up to interview? And I said, no, because I don't know what you guys do, and I'm sure I'll be terrible at it. But long story short, that happened. And within a couple of weeks, I was out in Chicago, back up to Madison, which, you know, I thought I'd never go back and work there because I left out a lot of things I did in college. But I thought that was a college town, right? And so, but it was too good of an opportunity to pass up. Honestly, the team was 8 people, I think, at our height. I was there for close to 5 years. Really started on the hedge fund side, not really my cup of tea. And then I shifted more toward the venture capital side of the portfolio, which a lot of local initiatives, a lot of emerging manager, smaller check sizes. I found that very interesting, especially here in the Midwest and some of our local initiatives. So my boss, current partner now, she let me do that. And so that's where we kind of got experience in venture and did that for a couple of years and really trying to manage that portfolio and get fund relationships. And that, you're right, WARF is kind of where it started, the whole institutional investment track. My interest in venture capital, it's like, okay, here's how I could make a difference or be relevant. And maybe I can use my skill set to do this here in Wisconsin.
That's great. Thank you. I think that's a really interesting background. I really like, one of the things I love about having these conversations and getting to talk with investors is just kind of humanizing the journey too. Because like one of the things that I think is particularly, well, I shouldn't say unique just to venture funding, but I think is kind of always the elephant in the room is just the power dynamic that exists, right? Like inherently it's one person asking another person for money. And so I think it's really easy to put that person on a pedestal and forget that they're a human and they're fallible and they had choices that they made. And so I appreciate you sharing that journey up till that point. So that basically brings us to kind of what you're doing now. You started a company, Omnivalley. Talk me through high level, what is Omnivalley and why did you start it?
So I'll go reverse. Because it spun out of WARF, right? And so I'd been working on it when I was there, obviously separate and apart. This is, you know, my brain's got to be doing multiple things. So it was a way to keep busy, but in a way that I thought, oh, maybe this is a relevant problem. So what started as a project, maybe turn it into a company. Never considered myself a founder up until, you know, just kind of recently, really. I mean, because, you know, starting a company is easy. It's like, what are you going to do with it or how do you make money with it? But the idea kind of came from, we have this hefty portfolio of all these great venture capital funds. People are attracted to WARF, people are attracted to UW-Madison and the technologies we can produce. A lot of grant dollars go there. There's a lot of other things going on in Wisconsin, specifically in Milwaukee too. But we didn't have venture exposure here. And that was confusing to me because we had funds here in place, like 4490s here in Madison. HealthX is very active. In Milwaukee, you guys have Generator, and plus this slew of fund of funds that we have now at the Badger fund of funds level. But back in the day, we didn't have all of those, but we did have some. And the Generators and the 4490s, and then the venture investors here in Madison. You look at their kind of co-investors. We don't have a lot of coastal exposure, right? We didn't have a lot, even within our own portfolios. It's like, okay, are you guys going to chat with our local funds? And they're like, yeah, maybe if there's some, but to get them on a plane to Wisconsin, half of them didn't even know Wisconsin was a state, right? Because why would they?
I appreciate you talking about all of this in the past tense, like we've solved it.
No, I think the market solved it, and I think the virtual world actually helped, and we can get into that. But the idea was because regardless of us, the Midwest is powerful. It should have startups here. Capital runs fast, so all of it was going to come together. It just took longer, and now this is proof that we're trying to help with this. But my thinking with Omnivalley was, all right, there's a lot of founder to investor platforms out there. Like Forest, you're one. You have a niche, and it makes total sense. But like AngelList, Naval never really wanted AngelList to be AngelList today. He wanted it to be a job platform, right? And so the idea for him is like, okay, well, now we can free up things. And it was just meant to give equal access to folks. But now it's a group think tank led by some pretty powerful syndicates. And it is what it is, but still, and that's all that funding is included on the coast. So the coast today still have over 2/3 of all the funding. If you look at all the VC funds and all of the investors, there's maybe 20% of that total market that's actually on the coast in the startup side. So what's missing here? It's like, we have investors, we have an ecosystem, we have Forest with Uncrowd, we have other people doing cool things. Why don't they come here? And they're like, it's not the startups, Grady, it's the investors that we don't know. It's the ecosystem around it. And, admittedly, we've done a pretty poor job of exposing what we have out there. And that's kind of come to light in just the past couple of years. But it's been interesting to see, just the idea of saying, well, you know what, you have enough deal flow platforms. Let's just market ourselves as not one of those. So Omnivalley is a vetted online platform meant for people who invest in startup companies or in venture capital funds. So it includes the LPs, the GPs, and the accelerators. Of course, there's angel groups, there's individual angels, there's accelerators, but everyone on the investor side who's a peer, right? So this is a peer universe on purpose. And because my thinking was, and we might still be wrong about this, but my thinking was there's enough platforms out there to fill out all of this information and this data, right? No VC fund's ever going to come to me and say, hey, all my deal flow comes from a scorecard, or they better not say that. But the idea was, okay, VCs have a lot of platforms that they input things on. Let's give them something that's 2 minutes to fill out. That's, geography focused, which the check size you guys are writing. Are you going to lead a venture round or a startup round or not? Very high level criteria that's rarely changing, right? And then on the, and most importantly, we have the email addresses, the phone numbers, and like the calendar links, the contact information that's near impossible to find for a startup company, right? Because they don't feel comfortable doing that. It's the ironic thing in our industry. They love startups, but they don't want to be spammed by them, right? And so for us, it was, well, why don't we just cap ourselves tremendously, remove the startup side of the aisle, and just see if there's a way to connect investors regardless of geography and market size, just taking a couple of handshakes and not all. We say this a lot, like if there's 10 handshakes to make a deal or to make a relationship, let's just take away the first 3. Let's get them to a yes or no pretty quickly if they want to continue, and not try to focus on, painting the Golden Gate Bridge. When you're done with the profile, you're going to redo it all. So the idea was high level. Investors are pretty slow at adopting this new kind of stuff. But if we do it and cap it and we keep it in a vetted way, then maybe they will be a little bit more transparent. Maybe they will come to Milwaukee and Madison and Green Bay and Eau Claire and say, hey, there's ecosystems here. I found this group. They have a portfolio company that looks similar to mine. Oh, they're in Minneapolis. I really wouldn't have guessed that. So, and again, virtual world, the COVID environment has helped because I don't think there are geographical advantages for anyone on the coast. The coasts are fine, but there's no geographical advantages to having a company there compared to here. Other than weather and other things. But So that's kind of helped this movement or the migration from funds from the coast looking more inward.
I think it's a brilliant product, by the way. But the thing that I would really like you to touch on specifically for this audience, at least to ground, is I think a lot of founders don't recognize how much collaboration among investors is crucial to deals getting done. And either anecdotally or just even broadly. Can you speak to that a little bit and about how like something that founders probably don't see that like is truly essential to a healthy ecosystem and a healthy deal flow?
Well, I think, I mean, well, one, it's very important what you do for us. I mean, you need to talk to other founders. Like you need circles like this. Like we're pretty weak on founder circles. I mean, we are. I mean, just relative to other bigger ecosystems. But founders who have raised money. So founders who have raised money that understand it, because they'll always have a story on, ooh, this did not go well, but they look like a very profitable and they're a great company, but their cap table will always have something messed up on it. Like, and someone had to clean it up. And so what I would say as a founder, let's say you haven't taken money or you're going out to raise a venture round, and we can talk about, the differences in the types of funding, but just make sure your cap table is very clean. Your lawyers will help you on this stuff, but some of the war stories, I mean, and I won't use any names or any companies, but sometimes you see cap tables with so many line items of accredited individuals or family offices, and the terms are weird. And then, of course, because that's the founder's local capital, but then a venture fund wants to come in later on and they're like, I don't know what to do with this. So, and I can spend time cleaning it up, and that's important. But
can I slow you down for just a second? Because I think I want to clear up some of the jargon too. Mm-hmm. So can you go into like what is a cap table, and why is a messy cap table problematic for an investor?
Sure. So the cap table just holds all of the line items of the investors in the company. So like, Omnivalley's cap table, we've had a few rounds, the cap table starts to get bigger. And this is where you hear people talk about, well, our pre-seed round or seed round, who's in that round. Usually there's a lead that sets terms in each one of these financings. The ones underneath them are co-investors. I'll just go through it for us because I know I use these words, but co-investors, downstream capital is what happens later on. So the connection's there, but yeah, your cap table, you want to be clean because you're always thinking about your next round. So if your next round and you have 40 angels in your pre-seed round, they all have their own different kind of line items and the terms are weird. This second investor is going to have to come in and work with these folks if they have certain like pro rata, if they can carry their shares, if they have certain liquidity preferences, who gets out faster. And more sophisticated venture funds, they have their strategies set. They like to invest in preferred share. They like to do certain things. So knowing that ahead of time and understanding the venture capital model, if that's the route you want to go with your company, a lot of folks do, then understand your local ecosystem. And again, your lawyers will help you through this, but even your lawyers might be a little bit more unsophisticated, or they might not know everything that's going on. So I would make sure to talk to founders at funds. You can see their portfolio companies, reach out to founders. They're very nice and they'll respond. But okay, how did you guys set this up? Because I want this fund in my company later on. And that, as a broad example, the founders will say, it's like, okay, well then you don't want to do something like this, like that would screw things up. They will pass on that. If your companies are, all else equal and your cap table is all wonky, it's a no-brainer for a fund to go the other route, right? So that's one thing that I think is important on the collaboration piece, especially. So when you ask about startups, it's talk to them, talk to people downstream, talk to people who have raised. They don't have to have raised from the same funds, but I would encourage those to look at those funds and those portfolio companies, because every VC fund is different. Stages might be the same, check sizes might be the same, but they might write terms differently, and you'll know that by talking to the founders, right? So
thank you. Yeah, that's really important. And so, in your timeline, Omnivalley is kind of springing up out of Wharf and this need in the market for collaboration and awareness of other investors. When does NVNG come into play, and what is NVNG?
Yeah, so Omnivalley has been around. It only opened yesterday, so we're super far along. No, Omnivalley's been around for a few years. obviously. And NVNG, I mean, NVNG it's not too dissimilar, right? Like Omnivalley is not a fund, but Omnivalley's core mission is to try to connect across geographies, make it very more transparent, and give everyone equal access, right, and opportunity. So NVNG was a term. So my old CIO at Wharf, when she had left in June of 2019, we had been talking about, okay, you're going to stick around Madison, you're from Freedom, Wisconsin, near Appleton. What do you want to do? And she had experiences. She's the one that helped put 4490 in place and recruit Greg to come here, initial backer and generator in 2012 to get them up and running. So it's like, you seem to care about local venture. There's a group right over the lake. They're called Renaissance. There's one right south of them called Centrifuge. And for those on the call there, those are fund of funds meant for in-state corporate investors. And we can get into what NVNG, but Wisconsin didn't have that vehicle, right? Like we have the public fund of funds, right? And those are great. They're early stage funds. They're mandated to invest here for their first fund, and then they can grow and do as they will. But for us, it was, okay, we don't have a place where large corporations can actually put dollars to work. Like we have some great CVC, corporate venture capital offices, Northwestern Mutual, American Family, and I'm sure some hidden others out there, but not a lot of them have graduated to that level of sophisticated investment or are super focused on the startup community at large, right? And so they'll have M&A departments and go buy companies and things that are more quiet and we don't hear about them. But the ability for them to go out and access venture capital managers, which are the ones tasked with seeing what's around the corner, right? They just hadn't really played in that space. And so while we're about 5 years behind the Michigan group, we still have the same number of corporations. We have big industry here, deep tech sectors, and our experience was going out and finding venture capital funds. I was like, why don't we do that again and just raise the money? Not for, it won't be Wharf, it won't be this evergreen pool, but why don't we raise and give corporations an investment vehicle to park their innovation dollars? So obviously our first priority is the financial return, but the strategic initiatives behind what corporations can list. Again, VC's job is to go out and see the future, right? Like that's their job. So why do that internally when you can use some of these funds? And so it is a fund of funds meant to invest 10 to 20, 25 different venture capital funds across the country that have an interest in Wisconsin or the Midwest, but are investing in startup companies, hopefully here, but are investing in startup companies, how they do in order to get those kind of insights and industry like expectations back to our corporations. So obviously returns funnel back to the state of Wisconsin, and our reputation should be heightened by way of venture capital. But we are, we are a middleman, right? We're sitting in between our investors and the funds that we can go out and invest in.
I'm going to dig into some jargon for a second. So getting into like high level fund to fund, why do fund to funds need to exist in the ecosystem? What's their role in the ecosystem at large?
Well, you're testing me, Forrest, because I think my investor side would say they probably don't, but we definitely do. I think it's tough. Like a lot of it is sophisticated, like institutional investors, like at Wharf, right? We used a fund to funds solely because, I don't want to say solely, this one had a philanthropic tilt, which is unique, but we used a fund of funds because on the West Coast, I can't get into Sequoia or Benchmark or Excel. Those funds, and jargon-wise, are closed. They're closed to new investors because they do so well. Every investor that they've ever had re-ups with them, right? So they're never going to lose a limited partner. If they do, it's weird. If they ever have an open spot, it'd be weird. And they're certainly not going to let the Wisconsin LP in, right? Yep. So
and even
for us, it was...
Just a second, because I even want to stop that. What's a limited partner? What's an LP?
Yeah, sure. Limited partner or LP. We're super creative in this industry, so but we just use a lot of jargon. But limited partners are just those who invest in the funds.
Yep.
So I won't go through all the fund structure, but the general partner is the one managing the venture capital fund. They're the one doing the investing into startup companies, and the limited partners invest into that vehicle. So it gives limited partners a way. We can invest in that one vehicle. We could do startup company investments out of our own pool if we wanted to. We can also go invest in a whole bunch of other managers like our fund of funds. But the difference with a fund of funds is that we ourselves are a limited partner, but we ourselves also have limited partners that sit above us, right? So it's just, and you naturally think, which is why I say maybe they're not needed, is it's fees on top of fees, We pay the fees to all of these managers, but the ones above us pay our fees, right? And so you'd ask, well, why can't they just do all of this themselves? And they probably could. But it goes back to my point that some of these funds are very hard to get into. Some of these top performing funds don't need new limited partners. For us, we had relationships at Wharf, some heavy life science, biotech hitters that we're going to try to carry into this fund. We have some great relationships with like the Foundry Group, who's out in Denver, that people know Brad Feld, right? So, but we worked hard to get that relationship moving while at Wharf, brought them to Wisconsin, let them see what was going on. And that took time. But they don't need any new investors. They return their fund. So it's working with that and trying to get those relationships. I think that's what you use a fund of funds for if you can't do it yourself, or if you don't have the time and energy to do it yourself. Large corporations care a little bit less about the financial return we can provide, which is like an individual venture fund. Maybe you hit an Uber or an Airbnb, right? But the idea of a fund of funds is like, I can get a broad diversification of things that might matter to me. Buying this company could make my company go further. I don't really care so much about the returns that this fund of funds can give me, even though I think we'll get decent ones. But the idea for them is broad diversification. This group can manage it. I don't have to do it myself. So hence why fund of funds exist. And our fees are usually technically lower, just because, we're not the ones going out and picking startups. We're not the ones doing that heavy lifting. We just cultivate relationships and make sure to maintain them in a way that they let us invest in their fund.
I'm curious. I'm glad you went into that, because I know from talking to founders, especially first-time founders, that sometimes the funding side, that side of the ecosystem, just feels like a black box to them. And so one of the questions I have for you is, like, as a fund manager, or in this case, fund of funds, like, you obviously are also doing pitching yourself. So you are sometimes pitching as the founder of Omnivalley to traditional, like, venture capitalists that us founders understand, but other times you're pitching to LPs. How can you talk to me about just, like, from the dynamic side of that, or for those of us that'll probably never be in the room pitching an LP? Well, what is that kind of, what's that, how does that differ? Well, what does that look like?
Yeah, I mean, LPs, again, they sit at I don't mean higher in a good way, right? But they sit at a higher level, right? They're less in the weeds, right? It sounds bad. I don't care about all the portfolio companies that my venture funds invest in. I hope they do well, but statistically, I know how it's probably going to look. Yep. But it's their job to care about those companies, right? That's what we're paying them for. When I talk about to investors as, an Omnivalley founder, I don't really change my tone. I don't really change who I am as a person. You're right. It's very behavioral. I think you want to talk to investors like a person, right? Most founders come in the room, they might be afraid. It's like, oh, this is our one shot. It's like, no, it's not. And if it's your one shot, they're probably not the best investor in the world for you. And nobody's that busy, let's be honest. Like, so the idea of speaking to an investor, it's just make sure that you clearly first articulate what the meeting is about. I think investors get annoyed in that way, whether it's LP or GP or venture capital fund. Just make sure you're like, hey, I want to pick your brain on this. I'm not going to pitch you for funding. Or, hey, this is going to be a pitch for funding meeting, and I'm not going to pick your brain. Because be respectful of their time, because, whatever they say, it's the most important thing they have. And they're doing other things. So but it is their professional job. Like, limited partners and general partners, startups could do without us. They have in the past. We cannot do without startups. Like, that is the important thing to understand. Like, there is no business if there's nothing to invest in, right? You can look at, like, Jamf up in Eau Claire. I don't know if they had venture funding, but it certainly wasn't a lot or prominent enough to make a lot of news. But look at how they exited, and they did very well. They don't need limited partners or general. So I think of it as startups have more power than they always think. So whether I'm in the Omnivalley seat or I'm a limited partner, what I'm looking for is different things, right? And how I'm approaching those conversations. But, me as a person, it's going to be, here's why I think Omnivalley is useful for you. Here's what I think it can do. And here's why our mission is what it is. If you don't buy into that, great. Tell me why. I want all the feedback in the world and I'll get your perspective. But it doesn't mean it's for you, right? Like, maybe it's not an investment for you. And so I think it's very important to kind of eat some of that pride and say, like, oh, this is our one shot, that we need this funding. And a lot of companies are in that position, but you have to be okay with a no, or you have to be okay with this one's not for me. Like I've fallen in love with funds that I think are great. It's like, I like these people. I want to go to their annual meeting. I want to, learn about their portfolio companies, but there's something off there and you got to pass on them. Right. And it's like, but those relationships have been built over like months and months and months. So you're expecting this is going to go well, get to diligence, it might not happen. Same on the startup to investor side. You might be brilliant at pitching, get through everything, but there could be something in your company that they find or that they don't like. And if you wholeheartedly disagree, then they're not the investor for you, right? There's tons of them out there. But so I would say, just be cognizant of that. Like every meeting's not the last meeting, is what I've learned, I guess.
There's two things in there that I want to come back to. The first one, I like highlighting gems when I hear them, and you acknowledging that startups have more power than they recognize is so important. I think so few founders recognize that. And the clearest takeaway, like Jamf is a great example. Anytime we see a company that doesn't actually need venture funding, like that's who's banging on the door. Are the investors saying, please let me come and invest? And that's the indication there. And so for all founders, just to recognize, like you're going to get a bunch of no's, as Grady said, but you also like have a lot more power than you probably think, and you deserve to be at the table.
And I think Forrest, it's a good example too, because I got a call and I won't name names, but venture funds, have you heard of this startup in Wisconsin? They look pretty interesting. It's like, no, I actually haven't. You want me to ask around for them? No, don't ask around, because this one looks very attractive. I don't want other people looking at it. And that right there, I mean, I'm a limited partner, right? So I'm going to root for the funds that I know. But from a startup perspective, it's like, no, if they're a good deal, you're competing in these rounds like you should be. It's better for the companies. But like, think about if every startup founder went on strike. Venture capital dies in the next couple of months. Like it's a very interesting kind of model, but obviously there's no shortage of startups and they'll never stop, which is great. But you do have more power than you think.
The other thing you brought up, and I'm very curious about, this one's a little personal because I go through the same stuff. When you're pitching Omnivalley, there's kind of this inside baseball, right? Where you're pitching a product that you're theoretically looking for an investor who's also your customer, which is the same kind of thing we run into with Uncrowd all the time. How do you navigate that?
I think it's tough, and you tell me, Forrest. I'd be curious your perspective too. It's like, because some people totally bought in, right? Like easiest sell for us, free platform. So number one, it's not hard to convince them if you just ease them a little bit and just say, hey, hold on with us, it's free, don't drop off. But it's a product for them. So they naturally go to, I'd almost rather have a product in an industry they don't understand. It seems to get further. But I believe this is important. So it's like, all right, you know what? I don't really, at some level, and we're to a point where as an investor, if you want your insular networks and you want to stick inside and not do anything else or share anything, then you're right. This is not a platform for you. So it kind of goes back to the investor conversations. We're not afraid of no's. Like it shouldn't be for everyone. Like I don't have a clear example, but it's like, if it was for everyone, then there's nothing really special about it. Like this is meant to be an ecosystem building connection platform. If you already have a built network, like you're not going to see Sequoia on there. Like what? Like they just aren't going to be in there anytime soon. Right? Yeah, if they and if they want to respond to my emails, but my point is those firms are doing things very closed off, and they've done it this way. They're machines made of people, right? Like they know what they're doing. They have great connections. They can take a company from zero all the way to exit if they want to. Probably not for them.
But if they raise from their LPs on their proprietary deal flow. They right. Want to say, we have unique secret sauce that you're only getting here.
Yeah. And so for them, that'd be a near impossible sell. I try to say like, well, if you want access to new markets, they tell me we have thousands of people that are out there scouting for Sequoia. And it's like, yeah, I'm never going to argue with you. Like, but there aren't many funds like that. Right. And so the funds that aren't like that, which is the large majority, do need these connections, right? They do need the ability to sit there and say, you know what, I can't travel these days. So maybe if I'm just fighting time zones, maybe I can show people what's going on in Kansas City just by maybe ignore Kansas City for now. I write these checks, I invest in these industries. I really like these types of sectors, or, you know, this stage, whatever it may be, again, high level, they're going to get pinged by investors that match those preferences. And they're going to say, ugh, they're in Kansas City. Or are they going to say, let's get a call with this group. They're only an hour behind us. So, and I think that's what's happening more. And so when we talk to investors about it, we get pushback initially, right? Like, oh, it's another platform. We have to fill things out, walk them through it. It takes them less than 2 minutes to walk them through it. And they're like, okay, so I guess I can do this. Oh, can you introduce me to that? And then they just start to get more involved. But I think it's going to have to be more of a behavioral shift. Like, because I mean, Uncrowd, you guys are doing something unique and interesting, but it still is founder to investor trying to connect folks that way. So what we need, and what you guys probably need too, is that behavioral shift in a way where it's like, PitchBook's too expensive. I don't use that anymore. I don't even know what Crunchbase Pro does, to be honest. So, or why they haven't really tried to do this. But what I really need is just a place that I can just get pinged for soft introductions and create relationships faster. It's like, okay, I've heard it enough from our investors. Let's try to create that. So it doesn't mean it's for everyone, like I said, but it should be for the majority. And if you don't want to use it, again, it's a free platform, free exposure. You'll get some connections on there until we figure out the business model side of things. But that's kind of what they're saying today.
That's good. No, I'm glad. I think it's a tricky needle to thread. And you're spot on. Back in my wine days, when our market was millennial women, it was very easy when investors would say like, I don't get it, and me be able to say like, doesn't matter if you don't get it, other people do.
Yeah, there's proof in it. And I think it's also important to note, it's like, when I say a behavioral shift, VCs don't want to share information. Like it is, and we can talk about inverse incentives all day with founders, but it's like the VC industry, what they tell us as limited partners, and what we care about is, how do you attract entrepreneurs? Oh, well, I have a proprietary deal flow that does this. Great. You better have some sort of kind of competitive advantage. But it's certainly not like, oh, do I go scout all of these platforms? And they all do. They will do that, right? Because they kind of have to, mainly because everybody else is. But the idea for them is like, I can do that kind of selectively. I can hide. I don't have to share contact information. I know how to hunt and pack things. And what Omnivalley is meant to do is, you have to put your contact information in there first. You have to open up your own door first. Just investors, so they should feel a little bit more comfortable. But hopefully one day it's founder friendly too, and hopefully everybody can start sharing and feel a little bit less spammy or whatever it is. And it's like, well, I don't want people to see my portfolio companies. It's like, well, why the hell not? Like, that makes zero sense to me. Because you're an early stage investor, you're going to need people to see this. It's like, yeah, but they're close to deals. It's like, but so I think it's just like, again, behavioral.
Yeah, I hope you are on the front end of some behavioral changes, because I can tell you, like, this is, firsthand accounts of two investors multiple times, two investors that are not talking to each other and don't want to share information.
Yeah.
And I know that if they talked with each other, they're both connecting the dots that the other one's missing. And the only person getting hurt by it really is the founder, who's not going to get the funding because the two investors aren't figuring it out and figuring out how to work together.
So it kind of goes back to Forest, almost full circle. It's like, be conscious of the money that you take, right? Like, investors, they do want to help, right? They're holding on to information because they think it's going to help you. Well, they think it's going to help their returns and their investors, but it should help the founder, obviously, if the returns are higher. But you're right. It absolutely hurts the founder. You want to move faster. You want to be nimble. Two funds fighting over information sharing. As a founder, I'd give them everything. Like, I don't care. So knowing our investors pretty intimately is important, because they know what they're getting with me, and they know who's on our cap table, and we're going to be transparent, like it or not. We're not for every investor then. So
I am going to, I've mentioned this a couple times, but one of the things that I love when we talk, not on a public forum, but one of the things I really appreciate about you is just that you play in all these different areas all throughout kind of the pipeline. And you have interesting perspectives in all of there. So I'm going to take advantage of those perspectives right now and just ping some questions at you, just kind of throughout the pipeline. Okay?
Do it. Yep.
So starting with thinking of startup founders, what do you wish more founders knew or realized?
I wish more founders who are like technically founders, in that space or considering to be, I would say, and I think it's a good question because it's a lesson I learned years after the fact. And I'm not saying doing it in an overconfident way and be that kind of person, but trust yourself much earlier, right? Like if you're going to go for it, go for it. And I've been guilty of this too. We've dragged our feet on so many things. But once you start to realize it's like, well, I haven't been in venture capital that long, but I've talked to enough people where at least I understand the market in a way where I can be dangerous, right? Like I can go in there and I can say, and obviously you start to hone your skills and what you're passionate about, but trust yourself, like literally go for it. Go into a room and you might not be the smartest, but if you're the founder, if you're the leader, you need to set the stage for the rest of your team, right? And I think it's also important to know that the team will get you farther faster. So there's a lot of individual founders. They're doing individual things. Might be afraid to take money from family and friends, whatever your prerogatives are. But try to make those on your team, at their advisors or something, make them champions of something that they're passionate about, right? Like you as the founder, you're always going to have more passion. Like me at Omnivalley, I'm always going to know more. I'm always going to know what I want more. I'm always going to, be more passionate about it because it's my industry. But the other people on our team are very good at what they do. And we put them in those places because it's like, yeah, this is perfect. They can be passionate about this. They might not have the overall vision, which, I think our team does. But if they didn't, it's like, here's a way where I can get us further faster as a leader. I'm trusting myself and my ideas. People are willing to follow it, but they will follow it a lot more closely and intently if they're doing what they're good at. And it might not mean, oh, we poach someone from sales and they're good at sales here. It's like they might be better at, pretty strict business development, and they might know things that they didn't really have this background on. But maybe that's what they want to do. Like, let them try that. Again, they're going to stick around a lot longer if you give them the freedom there. And I think founders get stuck with, like very typical routes, right? And I'm not saying any route's the right route, but we need a CEO, we need a COO, we need a CFO. Oh, now we're making money. We need some finance folks. It's like, do what's best and make sure the people on your team are happy and are willing to stick around and are smart. Talent will take you a lot farther. So trust yourself, know the talent that's on your team pretty intimately. And I think that's kind of, first base there.
I like that note. Frankly, I see that note across the entire ecosystem, just in that, like, I think we see these paths that have worked, and instead of recognizing them as potential paths, they start to slowly be carved out as like boundaries that need to be followed in a certain way. And certainly I see this from founders all the time in terms of like, this is how we need to structure our team. This is what we need to do for step 1 and step 2, because this is how the Y Combinator company, Y Combinator company did it. And frankly, I also see it at the VC level, where like a good example that I can think of off the top of my head is the like solo entrepreneur thing, where it's like the solo founder is like, sure, it's inherently more risky because, it's one person, and if this person loses interest, they're gone, and there's less skill that's tied into that. But at some point that went from like, this is a risk to like, this is a non-starter. And like we won't even talk to solo founders anymore. And it's like, okay, like I guess if you want to back yourself into that corner and commit that way. And those kind of things that I think are like good ideas that turned into hard rules end up being problematic for kind of everybody.
Mm-hmm. Yeah, I agree. And I think it's because there's no right way, right? And I think, and there's a talented group. I don't know if you've met Scott Williams in the Trivium group, because they just migrated over here to the Midwest, and Scott's from here. But every company's different. So they're much more consultative, much more hands-on in saying, and do a little bit with later stage companies, but all right, here's how I would structure some things. And they get very in the weeds. It's not a playbook, nothing against Y Combinator, the very early stage. Y Combinator companies tend to do well. But if that's not really for you, that model doesn't work. It doesn't necessarily work for everyone. You might not need to go full sales team right now. Your company might be more lifestyle based. And so understanding the differences and the nuance is important for founders, right? And so and also we alluded to it. It's like money might be the same color, but it certainly doesn't do the same things, right? Like who you take money from can be problematic. It can be really, really good, right? And so I'd focus on that, and you can educate yourself pretty easily on that stuff, or reach out to people like us. I mean, we're here, we're happy to help, and just kind of, be bold in what you do, and get yourself out there, and you can learn a lot. Like that's what I had to do. But it takes years.
What do you wish more fund managers knew?
Get higher returns. No, they do well. The groups that we've been. I wish more fund managers would. It's hard because they're all kind of different, right? But venture capital as a whole, just me personally, I wish every fund manager, regardless of their strategy or their investment focus, has to invest in either a healthcare or an education focused company. Like if we could change VC for the better or sustainable energy, might not be on thesis, but force them to put money to work there and see what happens. Like more of those companies getting funded, I think, are important. We need less Tinders, right? That serves no social value, but I think that's a dream that's misplaced and probably far off. But what I'd like to see kind of from, if we stick to the Midwest and maybe earlier managers that are spinning out or brand new, or, the Forest Richter fund one day, I like them to see advisory boards. I like them to not be afraid to ask for help. I like them to have strong connections, again, across those different stages and downstream, and make sure, because I don't care if you're in Milwaukee, I prefer you to be, right? But you need to have connections that can bring people to Milwaukee, and can you attract those entrepreneurs? So I think advisory boards can be really helpful, because they don't always have to be super formal, but you see these a lot, like scouts or entrepreneurs in residence. But get advisors. If you're a healthcare fund, get advisors they could work at hospitals, right? All they are there is for insights on a quarterly basis. But as an investor, like a limited partner, it provides a lot of coverage and a lot of value to sit there and say, okay, it's not just Forrest. I'm trusting Forrest. He can do the financings and he can find the entrepreneurs, but he's got a team of 10 doctors behind him that really understand this space. So even if Forrest is off base, hopefully these guys can weigh in and say, this company doesn't make any sense for us. Let's move on. And I think, a lot of fund managers are hesitant to ask for that kind of help or go out and reach for that, because there's pride. I mean we can do it ourselves, kind of thing, right? Or we have great relationships. I don't want other people muddying my room of thought. But as a limited partner, I don't care about that. I want you to have great connections, advisors all across the place that are responsive to you, and of course, we're going to call them and ask them these questions. So more support when it's a small fund and it's early on.
I think that's great. I think when I talk to new fund managers or people who are raising for the first time, I think there is so much doubt placed on them at this point that they almost have to build up this resistance of I have to prove that I can do this. And, mm-hmm. and I appreciate you softening that a little bit, because I think it again, it's just ultimately, the more we work together, the more beneficial it ends up being for everybody. Everybody is making smarter choices, capital's flowing quicker, we're finding more victories. I appreciate that perspective.
Well, I think too, Forrest, I'm emerging managers, for as much as I kind of hate that term, but emerging managers, statistically, they return better. I mean, they do. And it's because the good ones, right? The ones that actually make it, they do better because they're scrappier and they realize the need early on. It's like, whoa, I got to get some people within this industry to really learn about what's going on. Maybe my LPs don't even know about that, but it makes it a really strong investment for me. I feel comfortable in it. Venture's risky. You're stuck for 10, 14 years, right? So the idea of just going into companies and trying to prove yourself as an individual, that's great. But to be honest, as a limited partner, when you come around in fund two, it doesn't impress me more to say, hey, I did all this myself, or hey, I have all this great group of advisors that's here to still help me. And also they're going to be here for fund two as well. I'm going with this fund probably. So, and it isn't to say solo managers, we don't look at them, but it's tougher. And I think it makes sense to go out and ask, unless you're doing something, and I haven't heard of any that are completely different from what anybody else is doing, and you're the only one out there. But again, I haven't met really any of those. So
And then what do you wish more LPs knew? And you can take that in any direction you want. If you want it to be corporate LPs, if you want it to be individuals, if you want it to be your peers at fund to fund level, whatever, however you want to take that question.
I don't know if it's so much what they know, because I certainly don't know everything that the LPs. I mean, my tenure as one has been very small, or short, I should say. But what I would want them to do a little bit more, and I think it's happening in our state, which has been great, and kudos to Wisconsin LPs for this. We don't collaborate enough. Like, we don't share information enough. And I'm not talking about, oh, let's share returns with one another. It's like, because at the end of the day, I would say, yeah, who cares? We should share returns. Most of them are on our websites anyway, but you can download SWIB's very public report and it'll tell you everything. But we just do not seem to want to say, like, oh, you guys should talk to this fund. Oh, you guys should do this. And these are, big institutional investors, the worst of the world, the UW Foundation, Milwaukee's Foundation, SWIB too. And we're cordial with one another. I shouldn't say like no one's in competition, but the idea of opening up kind of our own thought process and trying to think about the funds that we're investing in, sticking to just a venture here, is important, because we'll double dip in funds all the time, right? Like, SWIB has a lot of weight. They have a very massive amount of dollars. They're very sticky investors. They're attractive to venture capital funds all over the world. But it doesn't mean if SWIB's going to have a big, powerful one, we probably don't necessarily need that fund in our ecosystem, because they're already kind of tied to one here, right? So maybe it's better that we have some earlier stage or something across that could relate to this fund later on. So the idea of knowing who's in the portfolio, specifically at the fund level, is important. And I think, on a local level, and again, LPs are getting better at this, specifically here in Wisconsin, we need to talk about our startups and we need to talk about our economic development initiatives, because LPs have, local tilts, right? If we're doing anything outside of our kind of normal fiduciary scope of just trying to get returns, it's local. There's kind of very few in between. It's like, oh, I want to guess on a fund over in New York. It's like, no, probably not. Will I guess on a fund here locally? Yes. And I think that's happening more with LPs. And I think you need to band together, which is why I say this has been happening. 4490 was SWIB and Wharf, right? They came together, they did this. Generator had American Family or some others, but you need to come together to make this stuff possible. And put your name out there as this innovative group. It puts your name out there as an investor that cares about local initiatives. And it doesn't really distract you from doing your core job of going out, investing in the Sequoias and the benchmarks and getting returns. But I do wish LPs would be a lot more collaborative, especially here locally. But again, I think that ball has started to roll, and it's moving at a good pace.
We know there's problems with networking, and sometimes the VC world looks a little too inward. But I am curious for you, who I think frankly are fairly candid as somebody in this space. How do you juggle networking? Like, how do you maintain good relationships with people? How do you do this at the different levels that you have to play in?
Yeah, always remember the name of the person you're talking to. Like, that is kind of like rule one, because I used to be terrible at that, because I was like, oh, I know 10 people. This is relatively easy. And then after the first week of calling VCs, it's like, okay, who is the one on Monday? But you start to get to know the funds, and it's really your world. Like, obviously I have friends outside of work, but I have a lot of friends in the venture space, right? You start to cultivate relationships with the funds that you've invested in, or there's funds we've been tracking for 4 years that we've never made an investment in, but I like them. And we talk about things all the time. The relationship isn't formal, but we have good relationships. So, but when you're doing it a lot, definitely remember the names or write it down. That was my kind of trick. But I would just say, to those in the room who don't feel that they're super connected or don't feel that they can go out and be connected, have your story down and what you want to talk about, and kind of get that in line. Or if you just want to ask questions to people, have that in line first, but then reach out to anybody you want. Like, I can't tell you the number of LinkedIn emails that I haven't answered, so I don't blame anybody for not answering mine. But I've sent out a lot of those. Like, if they don't have their emails, like we used to, it's probably terrible to say, but we used to scrape pitch book emails, and I'll send cold emails for Omnivalley, because Wharf was easier, right? They'd respond to me. I'm a limited partner and we're looking at funds to invest in. But Omnivalley's email, it's like, I have no idea who this person is. So I might not respond, but I was always very personable. It's a, hey, Tom, and then, give the message. So, nothing dissimilar from this is, I didn't even know what HubSpot or MailChimp was. So again, never thought of myself as a founder, but for me personally, it was just, like I said earlier, be a little bit bold, like step outside of your comfort zone. I'm not like the most, like I'm fine in social settings, right? Like I can, but they're not always my cup of tea, right? Like I don't need to go there and just put on every time, or for talks like that, but have a conversation. Like they're just people. Like it's never like, oh, I need to be nervous. I had an individual call me. He's in University of La Crosse. He just reached out via email and he's like, hey, saw what you're doing with NVNG. Would love to know more about it. I think I want to go into the space. Great, call me anytime. And he called me. We chatted for 15 minutes. And he said the same thing for us. He's like, you're pretty candid and transparent. It's like, yeah, I have no reason not to be. I think our generation is good at that, for better or worse. But I encourage him to do the same as I would say to everyone here. Just reach out to anybody you find interesting. Go to LinkedIn. It's a great tool. Type in the job description that you want. I want to talk to all the innovation managers in the state. I want to talk to all the CFOs in the state. That's what we're working on. But if you want to talk to venture capital funds, this is hard. Great. Come ask Forest or I, or we can get you in the right spot. It'll be a double opt-in kind of two-way mirror thing, but at least they'll know who you are. And if they say no, you'll know it. But intros are very easy. Find the people who are well connected. Don't be afraid to reach out. I might be slow to respond, but I will respond eventually. And VC funds, again, they want to talk to you. They want to know what you're doing. And a lot of them are getting better at, if you do find their email, a lot of them are getting better at an easy yes or no. And they might even be responsive in their no's. They might say, here's what I would need to see. And it's like, great. Now you might have a relationship through email. Maybe you get on the phone with them in a couple months, but at least you're there. At least you're working it. At least you're not afraid to go out and say something that you might think is stupid to them. It's like, who cares? I don't care. Like if you say something stupid, it's like, I've done it a million times, right? So
regular attendees to these chats have heard me say this before, but I love this analogy because I think a lot of founders think about like, it's one swing and hopefully I hit a home run. And that's just not usually the case at all. Like it's a lot less like Shark Tank than most people think, where it's a number of data points over time. And those data points end up forming a trend line. And if that trend line moves up far enough, then the investor bites. And that's really the way to think about it. And that can be just totally normal interactions. That can be like an intro for somebody else, but just in a really nice way that reminds them that you exist and you are doing cool stuff still. So that's good. You mentioned this a little bit about just not seeing anyone doing anything crazy, like new and different in terms of fun. What have you seen that's kind of innovative on the fun side? Have you seen anything that like made you raise your eyebrow and like, oh, that's unique, that's cool, I'm curious about that?
Certain industry types, I think, are what's been most interesting, because a lot is coming out kind of in the government defense space or kind of the cybersecurity space, things that I don't understand, right? But different types of industries that aren't just like, oh, we invest in apps, right? And we do that really well. And it's like, and great, that's a fine thing. It's not going to move our needle here, so I don't really need that. But Milwaukee should have a water tech fund, right? We have the Brew Accelerator and some other things, but there should be people here looking at what we're doing specifically. That would be interesting. Certain accelerators are focused on diverse founders now, and those programs I think are very interesting. And while we're way behind the curve on that, it's, those unique niches could be interesting because, whether or not, it's absolutely needed, a lot of these different types of industry verticals, but whether or not they are unique and differentiated, right? So it's like, okay, you're going to do something there's a competitor to SpaceX, right? It's like, I didn't even know NASA had a competitor until SpaceX came around, and now there's others out there with funding to do this stuff. And it's like, okay, that could be relatively interesting. Or I also think about what the big corporations are looking at. So obviously our fund is kind of built around that, but big corporations on the coast have graduated, spun out their own venture capital funds with different names right now. So because it used to be, I don't want to be attached to Cisco, so I'm going to go to work at this. And so it's like, well, let's just change our name. We don't need to be that anymore. So, which, is confusing to everybody, but it's different. It's a unique approach because they have industry insight from their own team. And now they have a fund that we as LPs could invest in. It's like the odds of this thing failing are pretty low. That looks like a decent fund because they hear it directly from the buyers and the customers of their own startup companies. This thing should do well, right? And so I think, unique industries that are out there, social impact is obviously big. Like I said, healthcare, education, energy, like I think funds should have to do that. But a lot of it is still all the same. Venture capital, for as much jargon and as complicated as we make it, it's the same kind of thing. So however you differentiate, I think what wows me are, well, you're doing something I've never heard of in this industry. Doesn't mean it's great. We got to look into it. And most of them are not, but the ones who are, it's like, this is pretty neat. Your model is different. I like the idea behind it. Can we get in? But those are hard to find sometimes because there's so many.
Well, that's good. You gave me an easy segue, which is, our audience is primarily diverse founders, women, people of color, LGBTQ founders. You could not, unless you went to Harvard or Stanford, you couldn't be closer to the archetype of the investor, right? You even wore the uniform tonight. I see you have your vest on with your logo on.
I thought I'd dress up, so yeah.
I appreciate that. So what I want to get into is some advice specifically for that audience. We talked about networking already, and you talked about, just the value of reaching out and the value of cold outreach. Talk to me. I guess where I'm going with that is that's always been available and it hasn't always worked for people that don't look like you or I. And so if somebody, what else can we do to be supportive? Like what else is out there? What resources are out there to be supportive to bring people into the network?
Yeah, I think, well, you're right. I mean, you and I are very fortunate, right? I mean, we have good upbringings. Again, I was blessed and from a nice community, and it set me up pretty well. But it hasn't always been equal opportunity. Like even kids I went to high school with that are from the inner city of Milwaukee, very different outcomes, even going to the same school just because of their situation. And it is nothing to, I mean, we're educated the exact same, everything else is kind of all else equal, but it's just the environment and the lack of opportunity that they had. So I think the important thing that we can do, and you see it with all of these accelerator programs, a lot of funds are spinning out. You have athletes and musicians, you have brand ambassadors preaching this now. I think it's just awareness, honestly. Like, and I say awareness first because I've yet to see kind of like the funding numbers, right? Like 2020 was a big year. I don't want this to be just a checkbox that everyone is going out and it's just, word of mouth. I want to see the funding, and ventures always lagged. And again, we don't share any data about anything, but once it comes out and we see the funding, it's like, all right, we're putting our money where our mouth is. This makes sense. Are these deals actually attractive? And they absolutely are. It's just maybe those founders in these communities haven't had a place to go, right? Or maybe they don't actually have the same education or even like the internet. Like maybe they don't have Zoom like we have it right here. And so they can't really tune into everything that's available, or they don't know where to look, right? Because nobody told them. It's like, hey, go create a LinkedIn profile or do this kind of stuff. Everything that we know and take for granted, I think rising tide should lift all boats and not just the yachts, right? And I think the idea of trying to connect everything, give everyone an equal playing field, that was the idea behind Omnivalley, right? Like we don't have the diversity focus, we don't have women but we did want to make it easy on a geographical standpoint to say, hey, South Dakota deserves the same love and attention that Washington, D.C. does. I don't really care the arguments against, but if there's a founder there and they're doing something cool, and there's a founder there and they're doing something cool, I don't care where they are. So from a diversity standpoint, I want to see the funding happen, and we'll get those numbers more but later on. But I think it's great that all of these things have been out there, and there are now events on there, and I know Generator's putting on one here soon with lightning rounds, and there's so many investors that have signed up, because I think the investors too, obviously the investors are to blame as well, but they don't know what else is out there either. They haven't actively tried to hunt and pack, and it's changed over the last couple of years, but now they kind of understand we need to. There's actually great opportunity, and now we're going to be shown it. And yes, we should have been doing this a long time ago, but at least we can see this now, and let's get involved. This is important, because it's crazy to me to think that the Silicon Valley, New York, and Boston control all the venture funding, right? It's even crazier to me to think like, oh, all of the white guys control all of it. Like, that cannot be the way that we're going to build the future. Like, that hasn't happened in the past. It's not going to be the future. So funding founders of all kinds are super important. Everyone has a different kind of cognitive perspective and diversity, no matter what their skin color is. So you should have an equal opportunity out there. And, again, like, my face might not be on here. My skin color happens to be white, but if investors should look at it that way. They should look at it from this founder is great. They match my criteria. You're right. I hadn't found them, and I wasn't hunting and pecking, but now I did. They belong in the portfolio. They have a unique perspective. And so I just hope it's not all lip service is my point. I hope the funding follows. And I think we have great initiatives in place, corporate resources and things. But again, it's a lot of talk right now. And it should be, I want that funding to kind of funnel through, and I want to see our funds that we monitor actually putting their money where their mouths are.
I think I agree. I think, well, first, there's something that Nadia Johnson, who's on this call, has said that I really think is like so succinct and articulates it so well, which is kind of white guys have monopolized opportunity, not talent, which I love. But you're right. Coming out of this summer, following the murder of George Floyd, every fund felt like they needed to do something and say something. And we saw these opportunity funds pop up, and we saw these little segmented cash, which frankly, like, I always find myself, obviously I'm happy to see that capital. Like, I'd rather that capital go to a founder than not, but still doesn't feel like enough to me and feels kind of weird how it's been done. And so I agree, like, we need to hold accountable to those checks and make sure that stuff gets deployed, frankly, because it has felt a lot like lip service. We're 6 months removed from the summer now. One of the things that sprung out of this summer was the diversity rider, which got picked up a little bit of attention, and it's on the fund manager side, basically saying, hey, the companies we invest in, we're gonna put in place a diversity rider that insists on some level of diversity within the organization. And I think that that's important. One of the areas that I have felt like could implement a lot of change in a hurry would be pressure from LPs. Anything like the same kind of edict from the LP side of things. I'm curious if you have heard of any activity from the LP level saying like, hey, I don't want to invest in a fund that just has an all white guy portfolio. That's not the companies I want to be investing in anymore. I want to make sure that we're using some of our dollars to insist on some change. Have you heard of any of that?
At the larger level, tougher, just because they have portfolios that are well built. They're always reinvesting into their current funds, but it doesn't mean they don't have initiatives. At the smaller or more local levels, absolutely. I think that this is a tremendously kind of powerful time for them to start getting involved. And you're right, whether it's lip service or not, it's like, put the money there. There is diversity in what they're doing, and and they happen to be local too, which is another great stamp of approval. It helps. But at the fund level, LPs, I mean, we ourselves, like, we have diligence, right? And what we do with our funds, and we ask them, ESG or environmental social governance policies, like, what are they focused on there? That was the very hot topic a few years ago. It's like, nobody wants to invest in oil. It's killing the planet, which again, very tough, large, limited partners, because we're heavily invested in indexes on the New York Stock Exchange. It's like, what do you want us to do? We can't pull out oil from this. So, because again, we're long-term investors. And so at the venture fund level, I think it's important, almost more important, that more funds pop up, more funds that are focused on diverse founders. I would love it if LPs got more involved. And to my point on ESG, that policy, NVNG, we're going to have a diversity and inclusion policy too. And I think not just because we need one, but because I think that's the way of the world and the way the world should be. Like those are things that we should be thinking about: social governance and making the world a better place, and the environment, and then also diversity and inclusion, because we just haven't focused on it, and it's wrong, right? And so it's like we seem to focus on this for some reason, even though it's kind of a catch-all policy, not everybody looks at it. But this is one that's pretty easily accessible, and we could actually go out and make a change quickly. But as a limited partner, it does become tough, because you don't want to tell your funds who are performing. Like we report up to, we need to give money to the university, right? Like that was our fund. We need to give money to our corporations and make sure that, they get their returns and what we give them, right? And so, but if we go to a fund and try to pressure them into certain things that is off thesis, and they don't know what they're doing, and they're just putting money to work to agree with us, that doesn't really help the founder either, right? That goes back to the kind of cap table situation that you don't want. So I think what is important is to find the managers who are focused on this. And so maybe it's their specialty or their niche, but a group that's been around for so long that hasn't really focused on this, and asking them to do it now doesn't mean they can't, but they're going to have a hard time catching up, if that makes sense.
Yeah, it does. This is kind of off the cuff, because I'm just thinking as you're throwing this out there about just different ideas here, because your point about just seeing more funds that are built to focus in areas, obviously that's an improvement, right? As opposed to forcing somebody's hand who maybe just doesn't have expertise in the area. From the startup side, we've seen kind of the value of reverse pitches pop up. Like the reverse pitch competition, which is like, hey, we're presenting a problem and we're going to fund the best solution to this problem. Do you think there's any room for action at a higher level, like action from LPs saying, we are going to fund a fund manager, we are going to seed a fund that targets these things? Who's going to present the best thesis and be our fund manager? And we're going to be the advisory board. I'm going to put it together. Have you seen? I'm just curious. I think ultimately where I'm going with this, I guess, is I think LPs have a huge, tremendous potential for implementing change because of all of the value and all of the capital that they're bringing into the market. And I don't know that they're not putting these things in place. It's just not something that I'm aware of, and so I'm just curious to hear your thoughts.
No, you're right. It is. I think you have your finger on the pulse too. I think just like 4490, that fund was created, right? It's not hard to create funds and go and recruit a manager. Generator now has a program attached to Northwestern Mutual, right? And they went out and found an individual. So it's not difficult to do. It's just, are these initiatives that we're actually, like you said, is this going to be lip service, or are we actually going to put our money where our mouth is? Yeah. And I don't think these are, we refer to altruistic investments, we refer to just local impact. It's like, I think you could actually get some niched returns here that we've been overlooking for a long time. So as an investor, it's attractive to me. So when I find funds like, I know it's a Spanish word and I can't pronounce it, but Samara's fund down in Chicago, she's raising a fund to invest in Latin American and female and Black founders. But she's one of the few doing that. And it's because of her background and how she sees the world. She goes, I know how to help people who came from where I came from. I know how to, navigate them through this venture landscape because I spent time at Math Ventures, I think she is. So the idea for her to spin out, it's like that emerging manager, whatever we want to call them, that fund looks very interesting from an investment thesis perspective because of who she's going after. And like you said, and Nadia is right, like the talent exists everywhere, right? So there's no, and especially for Samara, who's looking at things like that, she's like, I can find great talent and I can find it where people haven't historically looked. And yes, my fund will become very competitive when people start to catch wind of all of this stuff and start to put their money there. But until then, I'm gonna have a pretty strong fund of diverse founders that really have gone overlooked. So it's kind of her pick of the pie, right? And so I think that stuff is going to be pretty interesting. And so while we may or may not, have a bucket for diverse managers, right? That's tough because again, we report to other limited partners, but we're certainly going to look at them from an investment perspective as a niche or maybe strong investment returns, because it's important to the local ecosystem, but it's also needed, right? It's also something that belongs in the portfolios as LPs. But back to your question for us, I haven't heard a lot about it either. I haven't heard a lot of them try at the LP level, that is. I think LPs should be tasked with investing in them. I think that's where a good start could be. And there's no excuse why not. But I think LPs can be tasked with that. And then LPs like to get their hands in the weeds too, right? Like they like to get their hands dirty. They like to work with their fund managers, but they still got to pass diligence. They still got to be institutional. But maybe some of that criteria could be, wiped a little bit if it was doing something unique, interesting. These fund managers I can attract all these founders in Milwaukee that you've never seen or heard of and nobody's found them yet. It's like, that actually could be very attractive, not only from a return perspective, but from our local impact and our strategic initiatives we're trying to address. It makes total sense for a fund like ours. Again, if they hit our marks and things like that. But I think you're right. LPs need to be more active investors. That's certainly happening. But what they're doing kind of on like fund creation or local initiatives or investing more, out of goodness than out of strictly financial return, I haven't, it might be early for that.
Okay. One of the things that I'm really bullish on now, specifically for underrepresented founders, is crowdfunding. Now that some of the regulations have been lifted or loosened, it seems like that might be a very viable path. But I'm always cautious to fully endorse it because I know that it has derailed some startups in the past. It's run into, and admittedly, that seems to not be the case anymore. But I like to bring it up just to get investor perspective. If one of our founders on this call ends up going through a crowdfunding round and it's much cleaner now, they have one line on their cap table from some refunder or Republic or whomever. Is that scary? Is that scary for an investor to see a crowdfunding round, or is that totally okay now? That's safe, it's fine, no worries.
I think, well, you go back to the days of accelerators, right? When they were kind of getting up and running, and Y Combinator wasn't here for forever, and then Techstars, or maybe whichever one came first. But yeah, now we have 5,000 accelerator programs. So, but there were VCs out there that said, if the founder needs to go through an accelerator, they're not the founder for me. And having gone through an accelerator now, I can smile at it. I smiled at it then. It's like, fine, that makes zero sense to me, but your prerogative, how you invest. And I think crowdfunding has always kind of had that stigma too, where it's like, why would you crowdfund? I think you made it harder on yourself. And at Omnivalley, we're in a crowdfunding site now too. It's not Republic or Micro or anything like that, and they don't take equity. But the reason we're doing it is because I know that my distribution and my network is not high net worth angels. I also know that I don't have family office ties and connections, and those are the ones who kind of live on crowdfunding sites. And for the small amount that we're raising, it makes sense. But if you're trying to, open up or get exposure, the things that you have to think about are, the crowdfunding sites are helpful. I don't think there's a lot of funds who balk at those anymore. They're clean on cap tables, like we talked about. They always funnel everyone into one line, so it'll say republic.co or whatever it is, and that could have thousands of investors in it, but they'll handle that. They do that because not only is it easier for you and your lawyers, but for the next rounds, right? So the next rounds, they see Republic. They don't see thousands of angels, right? So I don't think it might be a red flag from like a behavioral kind of generational personal thing. It's like, oh, I was a founder and I didn't need this, and now I have a venture fund, so go work yourself to death. It's like, I don't know, they're not the investor for me then. But there is kind of a stigma out there. I just think I think that's been removed, and I think it's notably so because the crowdfunding sites are way overpopulated. There's so much deal flow out there in the last couple of years. Those crowdfunding sites are more populated. Like we got denied from a lot of them because we don't have revenue, and that's, they have too many companies. So the idea was, oh geez, like this could end up poorly. but not necessarily for the companies. And I think that the venture capital funds, they don't care so much anymore. And I don't want to speak for all of them. I'm sure there's those out there, or individual angels who are like, I don't like that I'm in a group of all these things and I got to pay fees for it. It's like, but I think those days are kind of done. I think you're right.
Good. I'm glad to hear that. I'm heading into my last few questions. So if anybody we'll have time for a short Q&A at the end. So if anybody has questions from the audience, feel free to throw those in the chat now. Adam's going to be monitoring them. But to change gears just a little bit, you're somebody I am personally impressed with. Like I think you have done a lot in your career, and you're still very young, all things considered. What do you do for fun? Like, do you have time? Do you have time for like leisure?
Yeah, I used to say like 8 hours on one thing, 8 hours on another thing, and then you're supposed to sleep for 8 hours. But it's never that. I don't do that all that much. So I just needed to keep my brain busy. That's how I stay fun, or how I kind of, have fun. I mean, traveling was fun. For those who remember it, grabbing drinks with friends. Right now, I like watching our sports teams let us down year after year. But in the COVID world, I think the most fun I have is just being able to talk to the venture funds, the folks that I know, people like you, being to share some thought leadership out there for our community, be more active, because it's kind of capped us to that, right? Especially in this virtual world. But yeah, I don't know. I'll read sometimes, not as much as I probably should, but yeah, pretty typical, I'd say.
I think you brought this up a couple of times, and it's interesting. I think 2020 has been a bad year. I mean, let's call it what it is. But in terms of like, if you're in the venture capital space and you're in the Midwest, like it has accelerated a lot of activity. Like it has been like, I've been able to get meetings with people there's no chance I would have got a meeting with, thanks to the fact that we're all just kind of tied to our computers. I'm assuming you found that benefit too. I guess without, I don't want you to share anything you're not allowed to share. I'm just curious, like, is there any anecdotes of anything that's come out of this year where you're like, there's no way that would have happened if we weren't trapped at home?
It's a good question. I mean, certain event invites, right? So I think that has been interesting. It's a boring response, but for us, things could have gone better if 2020 wasn't virtual. But some of the things that, just traveling around and speaking with people, I don't think you can replace that very easily. But, some of the events, like some of the abilities to go to some of these conferences or these larger demo days, or we follow Techstars quite frequently. It's like, but we could never get out there all the time, like all these in-person things. And now everything's virtual and recorded, and venture capital funds, they do annual meetings every year, which is where they talk about their portfolios. It's very kind of specific and close to their limited partners. Again, don't want to share any information with other people, but we can get invited to those because we have good relationships. We haven't made an investment out of the NVNG fund yet because it's not raised. So, but the idea of still getting invited and being able to attend and like I said, keep your finger on the pulse, I think that's been interesting. Like I don't even remember, how to shake a hand. And I don't frankly even remember what it's like to hold the phone up without talking through video. Yeah. So maybe but some of those days are nice when I can just walk around with my AirPods in. But I think it's really opened the door to just say, okay, I need a trusted virtual network and I need trusted connections. I have them. We can get on Zoom or hang out, whatever, anytime. But now some of these like bigger conferences that I would have loved to attend in person and just get the information and meet the people, not great for meeting the people, right? But some of the information that's out there, okay, like this is kind of interesting. I have time to attend this, right? Let's record it because they're recording it. This go around, can watch it on a Thursday night, right? I mean, it's easy. So I think taking advantage of that is important. I think, there's no shortage of information out there. There's no shortage of talks that are recorded or things like that. And a lot of them weren't historically, right? Like a lot of them weren't set up for this. Right. So they're doing it as a way to promote themselves because they can't travel and go do all these things. But it's real benefit. It's real value add to people like us, people like you too, and your listeners can listen into things like that. I think that's been a kind of a win.
Yeah, I totally agree. You mentioned thought leadership, and on that note, I appreciate you being here. Are there any questions that, as you've gone through events in general, or even tonight, that you wish you were asked? What are the questions that you feel like the question askers are missing?
Um, that's a good question. So probably not this question. But I don't know. I do like the question on, because it's obviously my industry and I'm passionate about it. It's like, what would you change in venture capital? Like what would, because I think, and for those who don't listen, check out the 20-minute VC and what Harry Stebbings does. And he's been doing this for longer than I am. And he's much younger, but he asked them that specifically because he wants to figure out for himself, or from their own words. It's like, because again, the incentives are, I need to impress my limited partners, right? And I need to get them their money back so my economics make sense. I can have another fund. But the startup companies, I'm going to step on their neck. I'm going to push them to metrics. Again, it might not be the right funding for your company, but that's what they're going to do. And from a venture perspective, I would just love it. And I said it already. I would just love it if, you kind of force them to do something that's good in the world, right? Maybe not strictly for a return or metric driven. And I think this is where, to your point, Forrest, LPs can be a little bit more lenient. Like, I'm not talking specifically on diversity or minorities, but healthcare, education, like I mentioned it, or sustainable energy. It's like, well, these are off thesis and they take forever to get through government regulations, and education companies are impossible. It's like, I know all of that. We're paying you to do it. So go do it and just make sure, just fund the company and help them like you would a portfolio company. I'm not saying they're going to be a rocket ship. You might have issues with it, but you're right. If enough LPs get together and do that, think of, the 5,000 funds that are open out there. If they all had a company like that, your statistics go way up, right? And they are harder, right? Government regulations on those things are very tough to get through. Not a lot of buyers in the space. So, but the idea for me, and what I would, say if somebody asks those questions, it's like, what would you change? It's just the mindset, like what you're going to invest in. Like, is it going to be beneficial for the future, or is it going to get you a return very quickly? They're very different things. Let's hope we can marry the two one day, but they're very different things. And I think funds should have to split some time there, or at least focus on it. And a lot of them are getting way better at that, right? Because they do, indirectly care about what their LPs are saying, but they absolutely do at their personal levels. They have their own kids, and they're like, yeah, the world's kind of a weird place. Maybe some of our companies, it's my job to go out and predict what they're doing and see it. So maybe we can try to get some of these companies in there that could make the world better in the next 20 years, right? Like, I think that could be cool.
I think that's a really innovative idea. And I haven't heard anyone talk about it before. I hope you keep talking about it, because I think it's really interesting. I know a number of ed tech founders that have products that almost everyone universally agrees are a net positive on our world, but just they don't necessarily totally fit being venture backed, or the venture investors themselves don't totally see the exit on it, and so they just are in stagnation. And I think frankly, I see that, like, I think ed tech as a sector is sort of having that problem right now. No, I think that's brilliant. I appreciate you doing this, Grady. I am going to turn it over to Adam for just a second and see if we have any questions from the audience, anything we want to dig into.
We do not have any questions that came through chat. So if anybody does have questions, feel free to put them in now.
It's because I talk too much for us. So hopefully I covered most of the things.
I think you were comprehensive. I think it's an indication that you went in depth, and that was good.
Yeah, comprehensive, I think I've heard. Succinct, I've never heard. So I'm working on that, but I appreciate it.
Well, I think we are probably going to wrap things up there then, Grady. I appreciate you being here with us. You can find Grady. Omnivalley is omnivalley.co. NVNG is nvngia.com. Grady, anything else where you want people to find you?
I would say add Grady to both of those, and that's my email. You can find them on both websites as well. But yeah, to anyone, reach out anytime. Don't be afraid. Like I said, it might take me some time to respond, but I will. And if you want to schedule a call or pick my brain anytime, or say, looking for venture funding, where do I go? Forrest knows stuff too. So Yeah, reach out anytime. And thanks, Forrest, Adam. Thanks you guys for having me on. I appreciate it.
My pleasure. And I will vouch for what Grady said. I was somebody that was cold intro to Grady, and I was intimidated when I first met him, and I was kind of blown away with how down to earth and reasonable and open he was as a human being. So I really appreciate you, Grady. I think you're a value add to the ecosystem.
So if I intimidate anybody, it's not on purpose, as Forrest can attest to. I did not, but yeah.
Oops. Let's see what I got here. I guess that's it. Oh, that's what I was looking for. We have a new version of our site coming out soon, which I am very excited to announce. We will be rolling that out in just a couple weeks. I know Adam and Nadia have been working hard on that, so I'm excited for that to launch. That'll be cool. And that is it. I appreciate everybody coming today. Thanks for giving us some of your time, and thank you again to Grady.
Thanks, guys.
Have a good
Thanks,
one.
everyone.